On the crypto side, I would say you're at the Trump buffet table. And so what happens at the Trump buffet? You get a very large buffet. Imagine you're at Mar-a-Lago, you get a very large buffet. You can't take your plate to the Trump buffet and pick out pro-crypto regulation and better taxation policy and better banking policy and stablecoin legislation and then take the plate back to your seat. You can't do that. With Donald Trump, you have to eat everything at the table. And so that would include...
What's going on, guys? Today we've got an awesome episode with Anthony Scaramucci, the better looking, younger Italian version of me. Anthony is not only a smart person, but he also is very, very well educated when it comes to history of money, history of economics, and also understanding where the world is going. In this conversation, Anthony and I get deep into what's going on with Bitcoin, the economy, tariffs, Trump, Kamala Harris even comes up. And we even talk about his brand new book, The Little Book of Bitcoin. Hope you guys enjoy the conversation. Here's my latest episode with Anthony Scaramucci. All right, Anthony, I thought a great place to start this conversation. Bitcoin is doing okay because of all these tariff talks while the stock market is down. Did you expect Bitcoin to be higher or what's going on? Why is Bitcoin kind of going sideways while the tariffs are destroying the stock market?
So I would have said that the hope is that Bitcoin would be making a transition away from a linked Mag 7 tech asset, NASDAQ asset, to something that's more non-correlative, that would be more akin to digital property / digital value, digital gold, et cetera, store of value. And so I think what's happening is the Trump tariffs, and obviously you and I have some intellectual disagreement on those, but I think that the Trump tariffs, I feel the policies are misguided, but what they are doing is they are leading us to a world where a non-sovereign digital currency, there's a much bigger, much broader bullish case for it. And so let's just pretend we're the rest of the world for a moment. You and I are both Americans, love America, both patriotic Americans, but we're 4% of the world's population. We might be 26% of the world's output, but let's examine the other 96% of the people. We're like, wait, whoa, we've relied on the dollar. Dollar primacy has gotten way stronger, Anthony, way stronger. Actually, in the last 20 years, stronger than people like Ken Rogoff, who just wrote a new book about the dollar thought would get, other economists. But it's incredibly... It's controlling the global economy. Okay, so the United States not only has 26% of the world's output, but our money is controlling the world economy. And I think the earthquakes that the tariffs are presenting are suggesting to people, wait a minute, we may need to have a different strategy here, or we may need to be decoupled from one sovereign's currency. And so I think that is what's contributing to Bitcoin strength, relative strength. Obviously, the markets are down anywhere from 5 to 8%, but Bitcoin is holding its own. It's probably roughly where it was at the beginning of the year.
Do you think that we are going through a reordering of the global monetary order, and therefore Bitcoin will be the big winner and it'll become like the next global reserve currency? Or do you think that we get more of like a bipolar, maybe there's an east-west currency, or like how do you see this playing out moving forward?
So what I would say to you is no, I think the dollar is going to stay in its primary position. I think even with what's going on with the Trump situation, I think it's very, very hard to find an equivalent. And I think that there's a sturdiness to our system. And one of the beauties of the system is a very flat, decentralized system. And so I think the dollar maintains its primacy, but I do think that people will be safeguarding themselves against executive policy behavior. So again, not the people in your podcast need a history lesson, but these powers got ceded to the president because the Congress was too cowardly to control these powers. The Congress once had the power to declare war. They did that in Vietnam. They all got ousted from their seats, lots of protests. So they said, let's leave it to the executive. And so they said to the executive, if you declare Emergency Powers Act, then we'll let you declare war. We'll let you make tariffs more or less whatever you want them to be. But the tariff power, if you will, alongside of the taxing power, because the tariffs are effectively another form of taxation, really resided in the Congress. And so now that we're telling the world we're not going to do that anymore, and so we're going to have an executive, it could be Democrat or Republican. There'll be some arbitrariness. There'll be some capricious nature to the administration of it. You better defend yourself. I think that's really the answer. So how do you defend yourself? That's why gold's moving around the world. Gold is at an all-time high. And Bitcoin, for people of your generation, younger than mine, and even people that are your children's generation, Anthony, would be ultimately my grandchildren, will end up having Bitcoin as a store of value. So to me, I'm not saying the dollar's going away. I think the dollar outlives Donald Trump and his policies, and will stay in its primary position. But I do think if you're a smart business person or smart capital allocator around the world, smart political executive, you're going to have other things in your portfolio now.
Well, you're obviously the youngest, best looking Italian on this podcast right now. And you sometimes go to the Middle East, to Asia, to Europe, many places around the world, and you talk to all these institutional investors.
I mean,
there's
a lot
funds.
of things I love about you. I love the tie with the rep qualities. I love the American flag. I love you sitting in the back of the press room where I once gave a press conference. I love all.
I was in the fake room. It was in the fake press conference.
You know what I love the most about you is that you really try to bullshit a bullshitter. I mean, that's what's the best part about you. You're like, okay, not only am I younger and better looking than Scaramucci, let me see if I can out bullshit him, even though he has 30 more years of experience of bullshitting. Let me see if I can out bullshit him on my own podcast.
I'm not going to ask you if you have pants on right now in this interview, but
pants on. I want to see. Look, I don't have pants on.
I know. Come on. All right. So here's my question though.
You have pants on, by the way? You're in your office, so you must have pants.
I got pants on. Come on.
I don't have pants on, but you know what? I put the shirt and tie on.
Yeah, you look great.
Out of respect for Anthony Pompliano.
Yeah, okay? I put it on for respect for you. All right. So you go to the institutions. You go to the Middle East. You go to Europe. You go to Asia. You go to all these different places. And when you go there, you talk to lots of institutional investors. You probably more so than many people really have a lot of trust. They tell you what they're thinking. They explain what their views are. What are they saying about Bitcoin right now? Are they all like buying it up and not announcing it yet, or what's going on?
Yeah, so I think they are. I think they are buying it. I think they're buying it on the margin. I don't think it's going to be a gigantic groundswell of buying until we greenlight legislation in the United States. So if you tell me before the end of the congressional term, we've got a stablecoin regulation, we've got guidance for money center banks on how they can custody Bitcoin and other assets, and we have some discussion about the tokenization of stocks and bonds and other assets, then I will tell you that there'll be large blocks of buying, or they're people worth 10, 20, 30 trillion dollars buying $500 million of Bitcoin, buying $1 billion of Bitcoin. Yes. Are the people on the margin buying Bitcoin today? Yes. But if you want to see $1 million Bitcoin, that's when somebody at a sovereign says, okay, this is part of the infrastructure of the world's financial services architecture, a result of which I have to own some of this property, I have to own this rail system. And they try to establish 1%, 2%, 3% positions in their portfolio. And so again, I think you're with me on this, where this is my position, Brett Messing, SkyBridge Capital's position, that Bitcoin is an asset class. If Bitcoin's an asset class, then it trades $20, $30 trillion in market capitalization akin to gold. If it's an investment, then it will be in the $1, $2, $3 trillion area alongside of the Mag 7 stocks as an interesting investment and a potentially heirloom collectible. But if you're telling me that things like Stacks, the Lightning Network, things are going to start to evolve in the system that allows us to use Bitcoin in a varying different ways, then yes, you'll see way more institutional ownership. And by the way, I got this wrong. I'll be very happy to admit that to people on your podcast. If you had asked me that question 3 years ago, let's say it was January or December of 2021 into January of 2022, and you said, is there going to be institutional buying? I would have said there's going to be massive institutional buying. I got that wrong. People are slow on the uptake because most of the people running these institutions, Anthony, are older. They're in their 60s. They have some skepticism about Bitcoin. Hunter Horsley, a friend of ours, both you and I know him well, has told me that there are people out there that are buying gold right now, and they think it's more portable and it's easier to use than Bitcoin. Okay, and but their birth dates are in the 1960s or in the 1950s, not the 80s, 90s, or the 2000s.
When you think about the other investors that you probably interface a lot with, is kind of this like private wealth channel. What are they doing, right? It's one thing for these big institutions that are sovereign wealth funds or whatever, but the private wealth, they have a client, or they have maybe a model portfolio, or it's kind of a different thing. What are they doing?
Well, they're cautious. I mean, again, I'll make their case for a second. They're cautious. I mean, the original knee-jerk reaction is the Saylor reaction. I wrote about this in my book, The Little Book of Bitcoin. Michael Saylor was a Bitcoin skeptic. Paul Tudor Jones, Bitcoin skeptic. Larry Fink has the largest, most successful Bitcoin ETF in the world. As recently as 2021, was a Bitcoin skeptic. I started out as a skeptic, and so what's happening is that there's just a slow glacial move to acceptance. As it becomes more accepted, then it's going to scale more broadly. But a wirehouse is sitting there saying, "I don't want to lose my client." The wirehouse doesn't say, "Anthony, come on in. I'm going to try to triple your assets." The wirehouse says, "Anthony, come on in. I'm going to get you 6, 7. Not going to hurt you or your family. I'm going to take some fees from you, and I'm going to be happy. My shareholders are going to be happy. Your private wealth manager is going to be happy, and you're going to basically be not unhappy." Yeah, I'm not saying you're going to be happy. And so why take a risk on something that's ill-founded? There'll be super bulls on Bitcoin at a million. There are super bears on Bitcoin at 10,000. And by the way, they sold me out. I mean, they took my fund. My fund was a buy on almost every one of those wirehouses. It got downgraded to a sell once I put the Bitcoin position on. And I'm not allowed to talk about my performance, but again, I put the Bitcoin position on, average price at around 20,000 a coin. The coins are trading at 90,000, and so you would imagine that was quite beneficial to our performance. And not without some roller coaster activity. We did very poorly in 2021. Lots of negative articles written about us. Your wife, Paulina, was kind enough to write an article that was at least observant of the facts. We've had very good performance. But the wirehouses fired me 4 years ago when Bitcoin was at 20,000. They're about to announce Bitcoin purchases and Bitcoin allocation strategies for their clients 4 or 5 years later. So I don't say that with any level of derision. I actually understand that they have to be behind first movers. They have to be behind innovators because their number one thing is not blow up the client. Number one thing is try not to lose the client in terms of the client being a client, and try not to lose the client any money. And so, and certainly you don't want bad press. And so I'm capable of taking bad press. You're capable of taking bad press, although you always get good press. It could be part of your looks and your charm that allow you to have that good press. But I take it. I got a lot of bows and arrows and don't mind it.
When you think of the current administration, you're not the biggest fan. I think that's safe to say. But they are good for Bitcoin and kind of crypto assets in general? Or do you think that the potential negatives of the economic policies and like broader financial market impact could actually still be a negative for Bitcoin and crypto?
So I think the policies are good for crypto. As I pointed out, if you're going to have mayhem in the markets, mayhem in the global trading system, I think more people will lean on Bitcoin. I think you're making a bull case for Bitcoin. I don't like the policies. I don't think the policies make sense for America. I think what Donald Trump is very good at is he can identify a problem, and there's a lot of truth in what he's saying, and I do admire that about him. And then the bridge to the policy, let's be fair to him for a moment, the bridge to the policy on the border identifies the problem. We definitely have a problem on the border. He inputs a set of policies that reduce the traffic at the border. That's a resounding win for the Trump administration. So much so that I'll make a prediction: it'd be very hard for the Democrats to campaign going forward on an open border. The Americans don't want that. And as a conservative, Milton Friedman, the conservative economist, would tell you, you can't have an open border, Anthony, because if you're in a welfare state, which the U.S. is a welfare state, market forces dictate that people will run across the border to participate in the welfare state. So you have to have a controlled border. I'm for legal immigration. I believe you are also for legal immigration. Helps our population growth, expands our economy, but you can't have that kind of nonsense. So he did a very good job on that. He's right that there have been trading unfairness, a lack of trading parity in the marketplace, but you have to step back and you have to look at it holistically. It was a feature and a design of the American trading system. So not to take your people through 80 years of trade history, but the United States basically said in 1946, we're going to accept tariffs from other countries as we export our goods and services, and we're going to allow them to come into our country relatively unfettered. Why? At that point, we were 2.5% of the world's population, 65% of the world's economic output, and the U.S. took a position that rising living standards around the world would reduce the likelihood of a conflict. Nobody wanted to have a third world war. And so we even, in addition to that, we bolstered that, Anthony, with the Marshall Plan. So the trading system was set up to be uneven in the beginning. I haven't talked to President Trump about this in a long time, but I would think even he believed that that was long-term a good strategy for America because it expanded our soft power, expanded our influence around the world, lots of American popularity post-Second World War in the free world. Where the president is right is that unevenness, Anthony, went unchecked for too many years. And then to further compound the problem, in the late 90s, we made a decision, the Clinton administration made a decision to let China in to the World Trade Organization. And if you remember this, China came in as an emerging country. And so China had the benefits of protectionist strategies for themselves, but we had leniency towards them as they were exporting not only here into the United States, but around the world. And Clinton said, we're doing that to urbanize people. We're doing that to make China a less poor country. And by the way, the more that we do this, the more they'll integrate into the world. And since it'll be prosperous for them, they'll accept the rules-based order of the world and they'll morph their system into something that looks more like democratic capitalism. Now, you're not old enough to remember this, but I am, and I got this severely wrong. In 1999, American workers went to the World Trade Organization meeting in Seattle, and they protested. They said, this is terrible. You can't do this. You'll hollow out our industries. You'll vanquish our manufacturing. We'll lose our middle-class jobs. You have to have more checks on the Chinese. I was a young Wall Streeter, 29 years old in actually I was 35 in 1999 when they did this. I said, Jesus, this is stupid. We need lower cost of capital. Peace dividend was going in the U.S. Francis Fukuyama said, the end of history. We're all going to globalize. We're going to be one happy community, one happy family. The protesters are wrong. Well, the protesters were right, Anthony. The arrogant Wall Streeters, which would include me, we got it wrong. Okay. And so anyway, fast forward, Trump was right. These malpractices by establishment politicians in the United States allowed for China's rise. And again, let me just continue to add to this. They linked their currency to our currency. Our currency was getting devalued at the time because of our deficit. They were an exporting nation. They should have had a strengthening currency at that time, but they had a weakening currency because we let them couple their currency to our currency. That's how they printed 10, 12, 15% growth. So again, the president's right about all that stuff. It needed to be recalibrated. He moved with Robert Lighthizer in the first administration to recalibrate that. One of the things, again, he's also right about is they were supposed to buy certain amounts of products from us, agricultural products from us, and so forth. In the ensuing 4 or 5 years, they didn't do that. So he is also right about that. They'd like the system to stay status quo. But I would have recommended to the president something less aggressive than this because he's got the dollar primacy. If he wants more manufacturing in the U.S., he could create tax-free enterprise zones, something he talked about in the campaign. He could effectively create new cities in the United States using the tax policy to reshore manufacturing. By doing it this way, it's going to cause too much of a supply shock in the system. It's going to be overly disruptive to the American economy and overly disruptive short term to the American worker. And so I don't agree with the strategy. Okay, but I'm not going to tell you that the president is not right. So again, got the border right, took that under his care with very good policy. The border problem is generally fixed. I give him a lot of credit for that. We're going to get to crypto in a second. The trade policy, I would have just simply said, listen, I signed a deal with you guys. You didn't adhere to the deal. You got 60 days to start adhering to the deal. If you don't want to adhere to the deal, I have to ratchet up tariffs on you, and I have to figure out with my allies. I wouldn't have ripped up the European contracts. I wouldn't have ripped up USMCA. He called it the greatest deal ever. He's the one that put the deal in place. If he didn't like aspects of the deal, I would have gone to those trading partners and said, listen, I'm back in town. I don't like aspects of the deal. Let's fix this. And oh, by the way, Europe, let's fix this. And then all of us together as citizens of the free world, let's take on the Chinese. But he declared war on everybody in a 360-degree angle. And I'm just questioning that as a long-term policy. I think that is a policy that will unnecessarily hurt the U.S. consumer, unnecessarily hurt the U.S. worker. When he had other options, he had other game theory options to deploy. So again, I'm trying to be as pragmatic, as probably open-minded to what he's doing, but I'm trying to offer you balance. On the crypto side, I would say you're at the Trump buffet table. And so what happens at the Trump buffet? You get a very large buffet. Imagine you're at Mar-a-Lago, you get a very large buffet. You can't take your plate to the Trump buffet and pick out pro-crypto regulation and better taxation policy and better banking policy and stablecoin legislation, and then take the plate back to your seat. You can't do that. With Donald Trump, you have to eat everything at the table. And so that would include the meme coin activity that started before the inauguration, the World Liberty Coin stuff that started before the inauguration. It would include post-inauguration, put money into my meme coin and have lunch with me or dinner with me. It would include his sons and Wickoff's son going around the world, touting the deals that they're doing and how the deals are connected into U.S. policy. I think that that's a dangerous thing to do. And I know there's whataboutism, right? We had Hunter Picasso Biden. I mean, his middle name was Picasso. He was selling paintings for millions of dollars. And then after his father no longer was president, we dropped the middle name Picasso, right? He can't sell his paintings anymore. So I know there's whataboutism and hypocrisy on both sides. But what I'm saying is I like the pro-crypto legislation. As a person whose business is reliant on this, I disparage the Biden administration, Elizabeth Warren, Gary Gensler, and others. I said these are very bad for U.S. Industry, very bad for U.S. financial services. If you want to maintain our mantle of financial services leadership, we have to have the right crypto policies. So I applaud the president for that. But again, unfortunately, you get everything. And I think some of this stuff is mucking up the wheels. It's ungreasing the wheels of progress towards good stablecoin legislation, greater clarity at the SEC, greater ideas about what banks are going to be doing in terms of custody. And so again, people can disagree with me and they say he's resoundingly great for crypto. If you're asking me a question, is he a better guy, better president for crypto than Kamala Harris? Yes. Is he a better guy for the U.S. economy or Kamala Harris? I got that at a maybe because of what he's doing with the trade situation. Okay. If he was Trump 1, it would have been a resounding yes, but Trump 2, I think there's some level of chaos. And by the way, you can't negotiate 70 country, one per country trade deals, Anthony. You can't do it in 60 days. It's not possible. Okay. If you ask a trade rep, it usually takes about 18 months to negotiate a one country to country trade deal. So, you're going to run out of supplies here in the U.S. We effectively have a trade embargo going on with the Chinese. And of course, the Chinese are clever people. They're half manufacturing there and they're shipping goods to be finished in places that don't have as big of a burdensome tariff. But that in itself is still a problem. I think there's a cleaner way to do this. And I think there's a more prosperous way, not only for America, but for the rest of the world to do this.
One of the things I find interesting is you, Ken Griffin, Mark Rowan, I can go through the list. A lot of people, I think, are coming to the conclusion he's calling out the right problem. He's taking steps to try to get to the right solution. I don't like the way he's doing it. I don't like the steps or, some version of that. And it does feel like, I think I heard David Sachs say this recently. It does feel like that is a different conversation than even 4 or 5 months ago. And I'm not saying that he's going to end up being right or wrong or this is going to work or not or whatever, but just like it almost feels like in a weird way by him talking about and doing some of this stuff, which I think anyone objectively could say is like been very chaotic and the messaging and all these kind of issues. It has brought a ton of attention to it, and attention doesn't necessarily mean solution will happen, but it does mean that the more people are paying attention to it, maybe the odds go up that we get to a solution, even if it is chaotic and uncertain and, kind of volatile along the way. Would you agree with that?
Well, I mean, I think you're making a bigger case for him. I think you're saying that he's a disruptive guy, and sometimes you need a disruptive guy to come into the situation, shock the system, and put it a little bit on tilt to get it right.
But I also, and I think one of the things that maybe people don't realize, like here's one of the things that I've thought a lot about. I don't think Biden got enough credit for the stock market performance under his time in office. And I think that there's plenty of stuff that people could critique him on and did critique him on and was right. Right. So it's like, Biden had positives and negatives. Trump, same thing. There's positives and negatives. But I think with him and these policies, one of the areas that I go to is like, okay, and I think you actually offered this is like, what else would you do? Right. So if everyone agrees like this is a problem, then we got to do something to address it. What else would you do? You're unique in that you actually have other ideas, right? You're like, hey, there's kind of, a more clear path to doing this. You can go enforce the current rules, all the things you described. But I do wonder how much of the United States policy right now is, if somebody else was president, we would just be kind of going along the same path. The debt would be exploding, like all these issues that we had. And so I kind of come back to this idea of just like, what's the one thing, if we had to pick one thing for him to be successful on, I don't know if it's the trade war stuff, right? To me, that feels like it's not the single most important thing. Some people would say the border, some people would say the national debt, some people would say, they'd all have kind of different things to pick. If you had to pick one thing and you were like, I have to pick one thing for Trump to be successful on that would really define a presidency and or ensure that Americans are better off in the future than they are today. Like, what do you think the one most important thing for this current administration to do? Today's episode is brought to you by Bitcoin IRA. Are you a crypto investor with a retirement account, but don't have any crypto in your retirement account? Listen up, this is for you. Bitcoin IRA is revolutionizing the way Americans save for retirement by helping smart investors diversify their savings with access to over 75 cryptocurrencies. With world-class customer service, military-grade encryption, and a vertically integrated licensed trust company, it's no wonder more than 200,000 Americans trust Bitcoin IRA to secure their financial future. Get started. It is quick and easy. It takes just 3 minutes to open an account. Once you're set up, their team of IRA specialists will reach out to guide you through every step of the process. Whether you're transferring an IRA from a legacy bank, rolling over an old 401k, or starting fresh with a new contribution, the Bitcoin IRA team is here to help you get access to real crypto in your retirement account. And here is the best part. As a Pomp podcast listener, you can earn up to $1,000 in rewards when you add funds to your account before tax day. Search for Bitcoin IRA in the App Store or visit bitcoinira.com/pomp to join 200,000 Americans on their journey to upgrade their retirement. That's bitcoinira.com/pomp to upgrade your retirement today. Today's episode is brought to you by Zappo Bank, where eligible members can unlock the power of Bitcoin without selling it. Need cash fast? With Zappo Bank's Bitcoin-backed loans, you can access 40% of your Bitcoin's value, borrowing as much as $1 million for a full year with low interest rates, zero fees, and no early repayment fees either. Now, here's the best part. You keep your Bitcoin, meaning you get to watch your holdings grow as the price of Bitcoin increases. Whether you're looking to buy a house, fund your child's education, or seize an exciting investment opportunity, these loans give you the flexibility to access cash without selling your Bitcoin. Unlike traditional loans, Zappo Bank's Bitcoin-backed loans have no minimum repayments, no early repayment penalties, and the flexibility to settle your loan in USD or Bitcoin whenever it suits you. It's liquidity entirely on your terms. Zappo understands the unique needs of Bitcoin holders. That's why they have developed a product designed specifically for you. With over a decade of experience in the Bitcoin space, Zappo Bank has been a trusted partner for those looking to make the most of their Bitcoin while keeping it safe. Your Bitcoin stays safe in your vault, untouched, never lent out, and secured in a global network of military-grade bunkers with cutting-edge security technology. Head to zappobank.com/pomp to learn more. That's XAPOBANK.com/pomp. Go check them out at zappobank.com/pomp today. I don't know if it's the trade war stuff. Right. To me, that feels like it's not the single most important thing. Some people would say the border. Some people would say the national debt. Some people would say, they'd all have kind of different things to pick. If you had to pick one thing and you were like, I have to pick one thing for Trump to be successful on that would really define a presidency and or ensure that Americans are better off in the future than they are today. Like, what do you think the one most important thing for this current administration to do?
Well, again, I mean, one of the things you learn when you work in the White House, you have a plan. And then your plan meets contact with the enemy, and then the plan changes, right? There was a joke about infrastructure week in Trump won. They never got there because there's so much things that are going on at the same time. So what I would say to you is that if I wanted to see one thing for the U.S., it would be economic growth, because economic growth, and if we could get it done in a way where capital and labor are roughly 50%. Like if you bring Mike Novogratz on, when he worked in the White House, he would tell you the rule of thumb was 20% of the U.S. federal budget should be tied to 20% of our GDP. It's at like 26, 27 now. It's too high. But the other thing you would know, our moments of greatest prosperity is when the distribution, the economic rent between capital and labor coming from a productive enterprise or an economy is roughly 50-50, Anthony. That's when we feel our most prosperous. That's when we feel our most aspirational. And the irony there is that the capital, there's less people that own the capital. They get very rich in that period of time. But the poorer people don't care because they feel aspirational. They have a platform, frankly, like my dad did in the 70s and the 80s, where he wasn't rich but didn't care. There was enough opportunity for his sons and his daughter to live an aspirational life in America. So when you go 55-45, yes, you'll get a Jeff Bezos at 200 billion or Elon Musk at 300 billion. And I don't begrudge them. God bless them. Don't want equal opportunity to be changed to equal outcome. I want equal opportunity, unequal outcome. So God bless those guys. But I'm just saying to you from a socioeconomic historical analysis, 50-50, we do great. We're something like 55-45 right now. And there's a lot of people that are unhappy about that. So if you said to me, the president was going to achieve economic growth and there was going to be a better distribution of the economic rent back to something that makes Americans happy, I think that solves a lot of problems. Moreover, I do believe you can outgrow the deficit. And I think you believe this because I listen to you and I read your newsletters. I think you see the abundance coming with AI, the abundance coming in biotech, the abundance coming in automation, robotics. There's a tremendous potential to unleash another gigantic wave of economic growth where we're way richer in 100 years than we are today. All of us, all of our living standards, and again, economists will point out the lowest members of our society here in America are middle to potentially upper middle class in certain countries around the world. And so I'll say this to you, and I want to say this to you to provoke you. If I gave you 150,000 US dollars, they were $1925. I give 150,000 of them, and you'd be one of the richest people in the society per year if you made that amount of money. And I said, but you got to live in 1925. But here's the $150,000. Or I gave you $150,000 of $2,025, but you got to live in 2025. Now, one person is exogenously crazy rich. The other person is probably, at least in the city of New York, in the middle class, right? But the question is, which society do you want to live in? I'm taking the society with the better medicine, the better streaming service, the 4K Super Bowl game that I can watch on Super Bowl Sunday versus the transitioning economy from the locomotive and the horse and buggy into the automotive. And you're getting the point that I'm making. And so if we can scale up, we can cure the deficit, we can solve some of these problems, but there's right or wrong policy. And I'm not talking about left or right policies, there's right or wrong policy. I think some of these policies are misguided. But one other point I wanted to make to you, which I think is important for your listeners, is Trump's view of Europe. I think people need to understand this because I do. And this comes from my time on the campaign with him. And remember, even though I was only in the White House for 11 days, I did spend almost a year with him traveling the country, did 71 campaign stops. Trump believes that the euro was put in place to devalue the industrial currencies in Europe. So just stay with me for a minute. Euro's created, it binds the industrial stronger nations of France and Germany to weaker industrial nations like Portugal and Greece and Spain. Okay, Italy has become a little bit more industrialized, but that would have been included 30 years ago when it was originated. And so it pulls down where the Deutschmark would trade in the free market, right? And so the euro really is just a fixed exchange rate among those countries. It's not really a sovereign currency like the US dollar, right? We have a 50-state free trading bloc. They have a 25-state fixed exchange rate. And so when Trump says things like, oh, they rigged the system against us, or, the EU, the European Economic Union, was designed to plunder us because they got the Deutschmark lower through the euro and they exported their products to the United States at a lower currency price. Okay, and so that's something I think is important for people to understand when we're having these conversations around the world. And so there was an opportunity to do a Bretton Woods too. There was an opportunity to do a Plaza Accords, where we could say to everybody and say, okay, we're all fairly rich now. We're all fairly stable countries. It's not 1945. This is what's fair to America at this point, and let's get there over time. I'm not going to force it today, but I'm going to give everybody 6 months to get into compliance with this. And that would have been way less disruptive to the supply chain. It would have been way less disruptive to the stock market and people's 401ks. And so he didn't do that. And so we have a little bit of a COVID-19 situation going on. It's sort of Trump 25, where in COVID-19, the supply chain got shocked and it caused a lot of shortages, which led to inflation. Fed thought it was transitory, but it was more secular than transitory. And I think that that's coming. I think that shock is coming. And by the way, you don't have to go by me. Listen to Paul Tudor Jones. He was on the air this morning explaining this very same macro dilemma. And Anthony, we could solve these problems. I'm not saying the problem doesn't exist. I'm not saying the president isn't right to identify the problem. But I'm saying, okay, there are other ways to solve the problem. And again, if you want to use tariffs as a negotiating thing, or you want to use tariffs surgically, read Robert Lighthizer book. He's not part of the administration this time, primarily because he had a more balanced, more measured approach than the one that President Trump wanted to take this time. But in his book, No Trade is Free, he makes the case for surgical tariffs. So if you have a country where the private marketplace is being funded by the government to dump lower prices and not market-based prices on another country in terms of price dumping, then you have to put up a tariff to protect your workers. All of that makes sense to me. I'm for surgical tariffs. I understand that no trade is free. I want fair trade. I understand all that, but going about it this way, I think, is unnecessary. I think it's causing too much damage, and in some ways, it's hurting the reputation of the United States. And I don't want that, and I don't think anybody really wants that. And by the way, he's got too many sycophants around him where there's nobody in the room literally telling him exactly what I just said. And he could disagree respectfully or disrespectfully, but we can't. Anthony, when you have a sycophantic board, you're a private investor. If I had a board, let's say you invested in my company, and I had a board where the first hour they had to kiss my ass before the board meeting started, you would fire every one of us, or you would divest your money from the company. You know that. I know that. You don't have to answer because I know you're a Trump lover, but you know what I'm saying is correct.
I'm an independent. Somehow, here's the other thing that we got to move on and talk about your book. But
okay,
one of the things that I do think has happened online, especially with like the anonymous accounts, is there's a lack of intellectual rigor in talking about this. So like you and I can talk about very nuanced components. We can talk about, hey, they should have done this, or I like this policy, I don't like this policy. Like there's an attention to detail and nuance. But what I see online is basically everything is just getting politicized to the point where if somebody says that they like an economic policy, immediately they're just like, oh, you're like a MAGA person. Or if you don't like it, you're immediately, you've got TDS, right? And I think that we've got to get back to being able to talk through this stuff with some degree of rationality, because that's where like reality lives, is in the gray. Right?
Listen, I'm all for that, which is why you and I are friends. I respect your view. I've read your stuff on the tariffs. Some of it I frankly agree with. Some of it I don't agree with. But I think that, that's what would make good business partners. That's what makes good podcasts. That's what makes good Americans, frankly. I don't want to be pitted one way or the other. Everybody hates me. And my 33-year-old son, who's closer in age to you, he's Stanford Business School graduate, his dad. The Republicans hate your ass because you left Trump. You disavowed Trump. And the Democrats hate your ass because you were with Trump. And so therefore you're definitionally canceled to them. And I looked at him and he said, and you're killing my networking chances, by the way, you fucker. And I look at him and I say, well, maybe I'm getting closer to the truth. You see, what makes you successful, I'm teasing you about your Trump love, but what makes you successful is you're an analyst. You're sitting there trying to look at all sides of the argument. You're not trying to get welded to anything. Both sides are actually making some good arguments. If we listen to each other, there is a matrix where you say, okay, that left-leaning idea is probably the right one on certain libertarian goals for a society to allow people to live exactly the way they want, not the imposition of whatever our ideas are of how to live, right? And maybe that's a good goal. And this capitalistic goal, which is a right-leaning one, which creates a free marketplace, which has unleashed a tremendous amount of abundance and has taken billions of people around the world out of poverty. Maybe that's a good idea. My point is, we are shutting each other down, not you and I. I'm talking about the left and the right, shutting each other down because it's either left or right. And if it's not that, I don't want to hear it. And I think it's very, very dangerous. And Anthony, you know this, our adversaries want us to do that.
Of course.
Our adversaries are so jealous of our prosperity, and they can't believe this sloppy country with this free speech and this lack of orthodoxy and this decentralized country with lots of checks and balances to clip people of having absolute power is flourishing. What irony to a strong man. What irony to a authoritarian that a country like this can kick everyone else's ass despite how sloppy and chaotic it looks.
I thought they were just envious of your great hair. That's what I thought.
Well, you're a little envious of that. I mean, I'm looking at your hairline. You could use a little help there.
Yeah, we're working on it. We're working on it.
Well, I mean, at your age, you got too much you got a little bit of Fauci-like recession going on over here. I can help you with that. So, me afterwards. And by the way, if I help you with that, you'll get advertising related to dermatology and skin products. You'll add that to your advertiser support.
If I'm ever advertising a dermatology product, you get 10%. Okay. The little book of Bitcoin you wrote, it came out earlier this year. It is excellent. It's got a ton of great stories. It's got kind of your story. There's a number of other things that you kind of cover on that. Why did you want to write a book that wasn't so much about like what is Bitcoin, but is more your story around Bitcoin?
Well, I wanted to write a book where somebody could pick up the book and feel comfortable and not intimidated. There are, if you read Safedean Amos, who is a friend of yours, and I listened to that whole conversation, brilliant guy. He wrote the Bitcoin Standard. That's probably more of the treatise on Bitcoin. That's probably more of the academic. Everything you know is in that book. But I've got to get people's appetite wet for Bitcoin. I've got to get people thinking about Bitcoin. And I thought the approach to writing a short book about it, a little book about Bitcoin, was personal stories and the odyssey of going from a non-coiner on zero, which frankly is first time you and I met in my office and I did your podcast. I was a non-coiner. I was at zero. And how do you go from 0 to 1 in Bitcoin? How do you get yourself off of zero? And I think what I would say to people, read my book first, read Safieddin's book second, because his book is better book, by the way, and it's going to be outsell my book, and it should. But at least my book will get you oriented, make you less insecure about your knowledge, make you more comfortable with the idea that this idea is being embraced by a lot of people who originally did not embrace the idea. And I think this is about neuroplasticity, right? You know, you could convince me of something, okay? And I would imagine I could convince you of something over time, you know, and I can look back on things that I've done and say, well, I got that wrong. I should have said this, or I should have said that, or should have handled this a certain way. And I think we're at our best when we have that neuroplasticity. And so the book is really about that. The book is about, how did Saylor say that this was going to be like failed online gambling? That's what he called Bitcoin, honestly. And now he's got $45 billion worth of Bitcoin in his company. How did it go from that? And I think it's an interesting story. How did Larry Fink go from telling me in the lobby of the El Arian Four Seasons, the El Arian Island in Abu Dhabi, Four Seasons Hotel, in the lobby during Abu Dhabi Finance Week, that he didn't like Bitcoin, but he just made a big investment in Circle, to having the largest ETF, best, most successful launch in ETF history, and the largest Bitcoin ETF. How did that happen? I think these are interesting stories. I think it makes people comfortable with the stories. You know,
you said Bitcoin is Netflix. Bitcoin is the iPhone. What's that mean?
Well, there's universality to it. Bitcoin is going to be your iPhone. I think every one of us in the modern world, industrial world, has one now. It could be a Samsung phone. I use the iPhone, frankly, because I have an iPhone. I have two of those, actually. And I just think Bitcoin is going to be as ubiquitous as your iPhone. I imagine a day where Bitcoin is on everybody's iPhone. You'll have a digital, secure, encrypted wallet, and there'll be some store of value known as Bitcoin on that phone. I think it'll have that ubiquity to it. And so that's what I mean by it.
You also wrote, I knew the risks of not jumping in were far greater than playing it safe. And it seems like we're reaching that point now where a lot of institutions are saying to themselves, I got to have a strategy. Having no strategy, or my strategy being I'm going to do nothing, may actually now be putting me at a disadvantage.
Yes, I absolutely believe that. And I'll say it from a portfolio manager's perspective, is if I'm not long, if what I believe is going to happen happens, if Bitcoin is an asset class, that means there's a portfolio consultant in the year 2030 that's sitting down with the state teachers of XYZ state, or the sovereign wealth fund of ZYX, and they're saying, hey, here's my model portfolio. You should have this much in stocks, this much in bonds, this much in gold, this much in real estate. And oh, by the way, we have to have this much in Bitcoin. Do you see what I'm saying? Mm-hmm. And when that happens, it's sort of too late, right? Because you're underinvested. And that's happening. You know, the state of Wisconsin, they started buying Bitcoin, right? They were asked, well, why are you buying Bitcoin? Well, somebody's going to tell me someday that it's in the model portfolio. I want to be there now. I don't want to be underinvested in it. And so to me, I think the evolution of an asset class requires you to be somewhat predictive, look into the future. If I'm right about that, what happens, right?
So it is now public knowledge that your flagship fund in 2024, so a $1.7 billion fund at the time, posted a 43% return, which was the best performance since inception. It outperformed its index, which only returned 9.8%. Talk a little bit as to how transformative this stuff is, right? If you put some of it into some of Bitcoin and cryptocurrencies into these funds, they start to perform very well. I think you guys were one of the top 10 best performing hedge funds last year. When people see that happening, do a bunch of people who weren't in the top 10 start to say, wait a second, like we're at a disadvantage. We got to put this stuff in our portfolio?
They say, look at those lucky dopes. They put some of their money in Bitcoin and they got lucky. And by the way, I was up for all of these different hedge fund awards, didn't get any of them. We had the top performing crypto related ETF last year, didn't get that award either. And the naysayers would say, well, he put Bitcoin in the portfolio. I mean, if I had done those returns with structured credit, I would have came home with the award. But like I tell my staff, I would rather have the money than the award. I'm not trying to prove myself to anybody. I'm just trying to say, listen, I believe this is going to work. I'm doing this 39 years, Anthony. And so I put my money, my personal money's in that fund, my personal money's in Bitcoin, my personal money's in digital assets. And I'm telling my clients, if they're patient, okay, they're going to be very well rewarded. It's not going to come with some level of volatility. We look like dunces. I mean, the funny thing is when I was a kid, we had heroes and goats, okay? But now the GOAT, because of Tom Brady's or because of Muhammad Ali, greatest of all time. When I was a kid, we were heroes and goats. I was a GOAT or the anti-hero in 2022. I was getting lit up like a Christmas tree for being the poster boy for stupidity. Look at this dope. He went into Bitcoin and he got torched. In 23, they didn't say anything. In 24, those returns that you're speaking of, not me, because I'm not allowed to speak about them, but those returns, finally someone like Paulina says, hey, you got to give the guy credit. I mean, what does Bill Parcells say about a football coach? You're as good as your record. You can all the bullshit aside, can the people perform or not? We put on a macro bet and we are performing. And I believe we're going to continue to perform with some level of volatility. And if people are patient, they'll be well rewarded. And I think you, listen, I read your stuff. I think you understand this as well as anybody in the world. And I would encourage people to buy your newsletter, read your stuff, because you see it, and you see it from a very interesting perspective, because you see it from a skeptic's perspective. You're not a jingoistic person. You try to provide balance and objective analysis to the situation. It's not just, he's pro Bitcoin, so now he's just going to talk his book. The reason why I listen to Saylor all day is that Saylor's an analyst. Okay, Saylor is like a financial engineer. He understands the mechanisms tied to the technology. And probably, frankly, he understands it way better than I do even. And so, I implore people to expand their horizon, read Safadayan's book, read your book about life, which was a great one, read Saylor's letters, listen to Saylor's speeches, and get off zero. Because here's what's going to happen. Let's say I'm wrong, and let's say you're wrong. And I told you had 1 to 2% of your portfolio in Bitcoin. It went to zero. Now you have 98 cents on a dollar. Are you really going to be that damaged? But if I'm right and it goes from 1 to 2 to 20% as a role of being right, this is significant change to your portfolio, significant beneficial change. Now, Saylor got really mad at me. You were at that book party where Saylor said, hey, man, I'm not putting my forward into this book if you're at 2% recommendation. And so I had to adjust the last chapter and say, hey, I got 70% of my money in this thing. Saylor's at 101, I think. I don't know what the hell he's at. But, some people are saying 2%, but this is the best idea that I have seen in my career. And I missed ideas. I missed Amazon. I did participate in Apple because I participated in Amazon and Apple, but mostly through the S&P, Anthony. I missed their inception points and the inflection points in those stories, and I don't want to miss this one.
The Little Book of Bitcoin that's available on Amazon, Barnes & Noble, and everywhere books are sold.
It's good to be on with you, my man. You're a good dude.
No, I'm asking. The Little Book of Bitcoin.
Oh, I thought we were done. No, we're not done. Okay, good. No. That's where it is. Yeah, you can buy it anywhere. I got an audiobook.
Listen, if you don't ask for the order at the end,
I got the Kindle. I got everything.
You do the audiobook?
I'm a spaghetti. I did the forward to the audiobook. I did my forward and Sailor's forward. I didn't do the audiobook. I've done the audiobook on some of my books, but I've got such a New York Italian accent that
I thought you were Irish.
Let me tell you something. When the Irish hang out with the Italians, you can tell all your Irish friends this, okay? When the Irish hang out with the Italians, it's a form of social climbing for the Irish. And don't forget that, okay? And make sure they don't.
All right. Thank you very much for doing this. We'll do it again in the future.
It's good to be on with you, Ian. Thank you.